all eyes will still be on the 2-year for me. We got by the ADP this morning. We still got the jobs report on Friday. Welcome to Volatility 411. I'm Joe Tigay. It is bad news is good news for stocks today. We had a weaker than expected ADP number this morning, and that has sent interest rates lower, and stocks are loving that. We have the S&P 500 higher, the NASDAQ higher. We have the VIX below 15 as I'm recording this video. So certainly the VIX is well off of its level where just a little bit more than a week ago of almost 19, as people were nervous about these high interest rates. Was it going to crater the economy? And really, interest rates have been on the rise ever since we had the US debt downgrade. We're still way higher than where we had been recently, yet the market is seemingly more and more comfortable with these higher yields. And if you look at last week, just in a vacuum, we had all this talk about Jackson Hole. There was all these rumors that Jackson Hole is going to be very hawkish, and it was. They didn't disappoint. They said they might even raise rates. Rates are going to be higher for longer. And yet last week, if you look at the week as a whole, we had the best performing sectors coming out of the semiconductors and the technology sectors. Those are two sectors you don't expect to do well in rising yields. Those are two risk on sectors. So maybe that was a sign that the market was comfortable with higher yields. There still is some appetite for some risk here, as the market has really responded this week. We've had a really nice rally to start the week, closing out an otherwise negative month of August. Now, speaking of rates, all eyes will still be on the 2-year for me. We got by the ADP this morning. We still got the jobs report on Friday. That's certainly a bigger number than the ADP. That market will move off of that. We'll have to wait and see how we respond, but it'll all be out this 2-year, the 2-year yields for me. You remember, people talk about the 210 spread being negative. That means a recession. Well, the recession's not going to come until that curve reverts to its normal level, until that curve signals that the Fed's getting ready to lower rates, or the Fed has already lowered rates. That means a slow economy. Obviously, that's what a recession's all about. So right now, as long as the yields are flat or inverted, it actually might be good for the stocks, and there might be some time left in this bull run. For Equity Armor Investments, I'm Joe Tigay.